Hi, this is Jack Miller. Hope you're having a good day. I wanted to talk to you about financing commercial real estate, and really could be residential real estate, at auctions. So the short answer is yes, you can, and our company, Gelt Financial, provides that financing. But like everything else, the devil's always in the details. But the quick answer is yes. So first of all, I want to go into how most of it works. Auctions, typically, you have no financing contingencies and you have to do all of your due diligence up front. And once you put your deposit down, you're hard, which means if you don't close, you're going to lose your deposit. So you have to be very, very sure that you want the property for the price you pay under the conditions that the property is in. And you have the financing and the money is lined up. So that's critical. Most auctions do not, in fact, none that I know of, frankly, have any financing contingencies. The reality is some people can make a lot of money buying properties at auctions, but it's not for the faint of heart. And my personal advice would be it's not for most people unless you already have the money and or you're highly sophisticated. That's a disclaimer. So I would be be careful about it. Don't just jump in thinking, oh, I'll bid it up, I'll get a great deal. And then if you don't have the money lined up, or if you don't have all your due diligence lined up, you're in trouble. The reality is, in the auctions world, that you have to look and bid on a lot of auctions, and you have to do a lot of due diligence up front to get very few. So you may have to do the due diligence on 10 or 20 or 30 deals or whatever the number is, have the money lined up. And most of them you're not going to get. Maybe you'll get 1 in 10, 1 in 20, 1 in 30. I don't know what the number is, but either way, it's a lot of work, a lot of risk, a lot of time, and a lot of money. But let me go on. So I think the key thing is planning. I don't want to be a naysayer, because at the end, I'm going to give you some examples that we've recently participated in that worked out very well for our borrowers, investors, our partners, and for us. The key is planning. Again, as I said, most due diligence, the deposits are hard, which means if you don't close, you lose it. Depending on the auction, some of them give you 28 days to close. Some of them, believe it or not, you have to close within 24 hours. So be careful, be careful, be careful. A couple other things. You need to be 100% sure that you have the financing and the money lined up. Again, there's no mortgage contingency. Ideally, you have to have either the money yourself, the money raised, or a relationship with the right lender who knows what's going on and is auction friendly. I'll get into a little bit more in detail. Make sure you do all the due diligence up front. Remember, as I've said 100 times on these YouTubes and probably millions of times in my life, people only tell you what they want you to know. I'm not saying they're deceiving or they're hiding, but you need to dig around and do the proper due diligence. Don't just go through it and say, oh, okay, it looks good. The realtor said, oh, I could rent it out for X, or it's sold. The other day we looked at a deal and it was in a pretty big city. And the borrower gave me the potential borrower gave me some comps. I said, where'd you get the comps? He said, the realtor. I said, did you check them out? He goes, no, we did our own comps. And of course, the realtor gives you comps. No offense to realtors. The realtors gives you comps that he wants you to see. And when we did our own comps, we realized that, the sale prices they gave us the top of the line sale prices. There were plenty of lower sale prices. Self-understood, there were plenty of lower rentals prices. So do your own research and make sure you know what you're getting. Another piece of advice I have for you is a lot of people get caught up in emotion in it. I've learned when you're bidding in an auction and they're online, write down on a piece of paper your high bid. Don't go over that high bid. Be very careful, because a lot of people, including me, I've got caught up on it. You get so caught up on the excitement of an auction. Oh, what's another? If it's worth X, it's worth X plus whatever. If I'm going to bid 100,000, I'll bid 101,000. Or it can get out of control real quick. So be very, very disciplined in the price you get. Auction deals, as much as I'm being a naysayer on it, are really perfect deals for bridge lenders and companies like Gelt Financial, because you can usually at an auction, you need to stabilize the property. It's opportunistic. So with a bridge loan, you could borrow the money, you could stabilize it. You could usually build in the LC leasing commissions, the TI tenant improvements, the CapEx money, because we're asset-based lenders. On the Gelt side, we also finance sometimes equity, not only the debt on it. And I'll give you an example where we offered to do the equity, but they turned us down. Know your lender. It's critical. Make sure everything is lined up in advance. Make sure they have the capital. Make sure they can close in that time frame. Make sure they're auction friendly. Because what will happen is, if they can't close, you're going to lose your money, and that's a serious thing. You're putting down big money on this. You don't want to lose it. Remember, risk and reward. When you're buying in an auction, they're much more risky for all the reasons I've identified, but the reward can be higher. You just have to make sure you really understand the risks. And most people, my experience is, they look at the rewards and they ignore the risks. Don't ignore the risks. Again, know what you're doing. So a couple examples of deals that we've closed in auction that have worked out very, very well for us. So one deal was, we got a call, I believe it was like the day before Christmas, or maybe even Christmas Day, from a couple guys who were buying a shopping center. I don't remember the exact square feet, but let's say it was 34,000 square feet. We thought, and by the way, they had to close by the end of the year. They went to another lender who promised them they would do it. The lender dropped it at the last minute. And what happened was, they called us in a panic. We got together. I'll fast forward, we closed, but I want to tell you about the deal. They were buying a shopping center. I believe it was for like 30 bucks a square foot. Really almost no due diligence. When you looked at it, it looked run down, looked like it needed work, and it looked like about 50% of it was occupied. We looked at the market comps and we said, if this was stabilized, we think it would be worth between 125 to 150 a square foot. And we think rents would be, 12.50, 15 bucks, somewhere around that, triple net per square foot. Even though there were no comps and no any real, I'm sorry, not comps, really no histories of tenants, no records, really nothing. We looked at it and said, for 30 bucks a foot, even if you have to throw all the tenants out, even if no one's paying, even if you have to start from scratch, and I think we ballparked it, put in 20, 30, 40 a foot in CapEx, LC, negative cash flow, all this, you're still way under the market. We financed that. In that case, we lent them, I believe it was 90% of the purchase price and a certain amount of money, I forget the amount, for CapEx, TI, and LC. In that case, it worked out for them. A side note, I was personally involved in that deal, and I actually offered to put up the equity. We wanted to be their equity partners because they got a fantastic deal. They suffered with the property for a long time, to be candid with you. There was negative cash flow, tenants didn't rent, there were more problems than they thought, but ultimately that will be a home run for them. Now, these were sophisticated guys. They had a good amount of cash on their own, but again, they were panicked at the end because unless we came through, they might not have been able to close it. So that's one positive example, and it was a fantastic example. And to be candid with you, I wish I would have bought that property. I wish they would have taken me up on the equity, because they bought the property so cheap that it covered up a lot of the problems. I have an expression in real estate. I said, if you buy it cheap enough, it covers up all the mistakes that you're going to have. It won't matter if you buy it cheap enough. But the problem is, in auctions and in the market's priced to perfection, and auctions are priced to perfection. So a lot of times you're not buying it cheap enough. But anyway, that's one example. Another example of a positive one was, a couple guys approached me. They wanted to buy properties through county sheriff sales. In this particular county, you needed to have the deposit in advance of the sale, I think 4 or 5 days. And when you had the sale, if you won it, or were the successful bidder at the sale, you had to fund it by the next day at, let's say, 1 or 2 o'clock. How many people can fund a deal? They have to have a deposit in advance. Maybe you're going to win, maybe you're not. And then you have to fund it in advance. Also, there's no room for title insurance, and you can't get in to see the properties. Who's going to buy a property without title insurance? You need the money within 24 hours. You can't see it. We did a deal with them. They happen to have some cash, and what we worked out was a partnership where they provided the first $300,000 to the partnership. That's what I call first loss position. We provided $5 million in financing, and they bought properties, and they bought them, and we funded them, and we felt comfortable that that $300,000 was a safety cushion. I'm giving you, they did certain things to protect the title. They did mortgage and judgment bring downs. They looked for properties that were on the market or were recently on the market, so they had pictures. So they did certain things in advance to do their due diligence. So that worked out. I think they wound up doing like 17 or 18 or 19 deals with us or something like that. And then whatever, I think they got a cheaper cost of capital or something happened. they stopped doing business, but whatever. But anyway, the bottom line is we can do financing and you can make a lot of money at it, but proceed with extreme caution. So ultimately, the answer is yes, we can do financing and other lenders can do financing. It can be a vehicle, but go with proceed extreme caution when you're buying a property at auction. Okay, check us out. Remember to like the YouTube, ask questions. We certainly answer them, and we're here to provide your financing. Remember, check us out at geltfinancial.com. And when your bank says no, we say yes. Have a great day.